Hello, everyone. My name is Maria Benintende. I'm Industry Director in the Energy and Environment Practice at Frost & Sullivan. And today we're going to talk a bit about the hybrid energy market. We're going to share some of the key findings from a study we published last year on the hybrid energy market with a forecast to 2025. We're going to begin by giving some clarifications about what we consider as hybrid energy systems in our research. We're going to present the drivers and restraints and our market size estimations and forecasts. Then we're going to talk about key countries, the competitive landscape, and then we're going to finalize highlighting some growth opportunities that we see for the coming years. So this slide that you see here is to illustrate what at Frost & Sullivan we understand by hybrid power plants. The concept of hybrid energy systems covers a diverse range of power generation and storage technologies and their combinations. The most typical combination is the integration of an intermittent source of energy with a dispatchable source of energy or storage. But hybrid power plants can also encompass complementary generation technologies such as wind plus solar systems. And you can also combine technologies with the goal to increasing the capacity factor using, for instance, a combination of solar thermal and biomass generation. In this study, that we produce at Frost & Sullivan, hybrid energy systems are defined as the co-location of two or more generation systems with storage using the same control platform, and these assets have to be integrated behind a shared interconnection point. So that is the definition that we chose for this study. So here we see some of the combination I was talking about. Specifically in our last Frost & Sullivan study, we covered 5 hybrid power plants configurations, which we understand are the ones are holding the highest growth potential. So it's hybridization with batteries for solar, wind, and turbines, and the combination of solar with wind or with engines. And in terms of applications, we are considering systems that are larger than 1 megawatt. We looked at utility scale projects, village and island electrification systems, and also commercial and industrial power systems, always above 1 megawatt of power. So why are we discussing hybrids today? Why are these systems gaining so much traction? So the simple answer to that is because from an owner or developer standpoint, hybrid power plants make a lot of sense. In this slide, we try to group the major advantages that hybrid has versus standalone generation assets or standalone storage. And we can summarize that benefits in CapEx, savings in CapEx, savings in OpEx, gains from the optimization of operations, and also gains from the provision of different grid services or energy products. So in terms of CapEx savings, having two co-located power generation sources provide cost savings in the project design, also shared equipment, in labor, savings in installations, in permits, and also in interconnection. So together, these savings are estimated to be in the order of 10% for the case of the utility projects, and it can reach up to 20% for distributed generation projects that are smaller systems. The other bigger area of savings is related to OpEx. So the most obvious savings, if we have a combination of, let's say, solar panels and engines, for instance, would be related to fossil fuel savings. And because we're talking of two power plants combined, there are gains from joint operations and also from maintenance. In the case of commercial and industrial systems, the hybrids can provide electricity bill savings because they allow companies to reduce load charges, and also provides the possibility of load shifting if there is an associated battery where you can store your electricity for periods that where electricity or tariffs are higher. So hybrid power plants also deliver optimized operations, and that is the other benefits, because they can overcome the limitations of the individual generation technologies in terms of fuel efficiency, in terms of environmental footprint, dispatchability, and also they can provide firm capacity, as well as the flexibility to avoid the typical curtailment that we see and to recover clipped energy if we had solar or wind with storage plants, let's say. And last but not least, depending on market regulations and the possibility to value stack, hybrid power plants can provide additional revenue streams in the forms of ancillary services or through energy arbitrage as well. But these benefits are not only for the power producers or the developers. Actually, there are substantial gains for society and for grid operators because hybrid power plants can provide most cost-effective use of transmission systems, and also they can help to defer investment for the expansion of transmission capacity, and they can mitigate renewable variability and minimize the need for renewable energy curtailment. So here in this next slide, we summarize some of the key drivers and market barriers for hybrid power plants. So there are strong factors contributing to create a business case for hybrids, but on the other hand, there are also considerable market barriers preventing the hybrid energy systems to take off. In terms of drivers, the imperatives to achieve deep CO2 reductions are a key factor. This compels the substitution of fossil fuels with renewable energy across wholesale electricity markets, across corporations, across industries, and also across villages and island electrification. Also relevant, especially under the current scenario that we live in, hybrids provide a way to achieve energy security. And with all these decarbonization imperatives and the need to achieve energy security, the share of intermittent renewables increases, and with that also increases the fluctuation of power generation, leading to periods with oversupply from renewables. So this is driving regulation agencies and the governments to adopt market designs and develop regulations and incentives to foster the adoption of flexible assets, which is the case of hybrid power plants. Another driver that we see is the declining prices for solar and storage as a result of increasing manufacturing scale, but also some technology advances. And finally, there is also a still very nascent but growing preference among large energy users like technology companies like Google, for instance, or Facebook, for PPAs that are capable of matching the around-the-clock load curve. This is making power producers to include some dispatchable renewable sources or storage in their generation portfolio. So in terms of barriers, the main obstacles of hybrid grid-scale projects are related to the regulation. Most of the electricity markets around the world don't have a definition of hybrid systems or the operational rules for them. So this, of course, prevents the development. Also, in most markets, we still don't have ancillary services regulation or capacity markets, which also restrain the possibility for hybrids to build a business case. Another point is that there are certain supporting mechanisms and policies that are used to foster renewable energy that actually play against hybrid development. For example, if you take net billing or dispatch priority or feed-in tariffs, which are some incentives that we can still find in many energy markets, these mechanisms enable producers or prosumers to get the full premium price, no matter the hour or the day, and they always have the right to dispatch their power. So that they produce. So there are no incentives to pair renewable energy with storage or to add another technology to firm the capacity. The other group of barriers that we see are related to operational risk and investment. So different from standalone power plants or standalone storage systems, the design and the operation of hybrid power plants are heavily dependent on the specific user requirements and the market dynamics. So this, of course, limits the possibilities for standardization and increases the complexity of projects. Another barrier is that worldwide, there are still few project developers with experience on different generation and storage technologies that can meet the required capabilities to model, to design, and to construct hybrid power plants. And finally, even though hybrids can represent considerable advantages in terms of OPEX and CAPEX, the total APEX, the total CAPEX, the total investment that a developer may need to face is actually higher, of course, than if you take just a conventional wind or solar farm alone. So with that, we have the drivers and restraint covered, and let's talk a bit about numbers. So in this chart, we show that the annual market for hybrid power plants installations and the forecast to 2025 in terms of annual additions in megawatts. So as you can see, this is a very nascent market with 17 gigawatts coming online last year. So if we compare global renewable installations with hybrid installations, we see that actually hybrids is a very small market and represents less than 5% of the total renewable capacity installed. But for the next years, we see at Frost & Sullivan that the capacity additions are going to expand at a CAGR of 26.7% and will reach almost 40 gigawatts of annual markets in 2025. So as we mentioned, this expansion is supported by decarbonization efforts from all types of participants of the markets, like governments, corporations, industries, and also is driven by the further decline in technology costs, evolving regulatory frameworks that are favorable for hybrid development, and also improvements in the design, in the operation, and in the power controls of hybrid power plants. So with a few exceptions at a global level, we can say that utility scale business cases are still under development and under assessment. In most markets, there are pilots and demonstration projects, but they are still waiting for the right regulation actually to be released. Of course, there are exceptions of more advanced markets, but that is the global, let's say, general picture. In village and island electrification, we could say that the development of hybrid power plants is a bit more mature because of the authorities look to meet environmental targets and increase power demand and meet increased power demand using hybrid power plants in general, part of microgrids. So we have seen some hybrid being deployed in islands in APAC, for instance, or the Caribbean also is a very popular destination for hybrids. And then if we take the commercial and industrial sides, hybrids have gained traction with the combination of engines and batteries with solar. And we see that mainly at mining sites, at resorts, data centers, and also some of the most energy intensive industries. So let's talk now about investment. In this next chart, we can see the growth in installations. How is that reflected in terms of investment revenue levels? And we have this chart breakdown by technology. As you can see, solar will remain the technology of choice for hybrids in all the three end-user applications, combined with storage for utility plants, with storage and engines or gensets in village and island electrification, and also in commercial and industrial facilities. During the forecast period, we see investment in solar PV co-located with storage or other generation technologies to increase from 5 billion to 16 billion. Then the second largest portion of hybrid investments will come from batteries, given because of course of the versatility of the batteries, because they can be combined with virtually any generation source or hybrid arrangement. Then we have wind hybrids are in the third place. Of course, wind hybrids are still limited to pilots, and we expect them to continue to lag behind solar PV hybrids because it's of course more difficult to make a business case for wind. As you know, good wind power resources are not always available and are less evenly distributed across the globe. Besides, wind generation is more unpredictable and is not the preferred option for the smaller setups. However, we see wind hybrid power plants will continue expanding at a considerable pace, around 20.8% CAGR, mainly in utility scale applications in places where there are excellent wind resources and incentives for storage, such as Australia, India, the UK, Ireland, and the northeast of the US. Then we also have thermal power plants using gas and steam turbines with batteries. During our research, we came across some interesting retrofit projects with good results. The most emblematic maybe was the one with GE with Southern California Edison. So the combination of gas turbines with batteries provides more flexibility for thermal capacity because they can provide shorter start time, faster ramp up and black start and islanding. And also with batteries, these plants can provide spinning reserve without burning fuels. And this, of course, makes it more environmental friendly. And we expect that as the economics gets more favorable for batteries with more restrictions to carbon emissions and with the development of ancillary services markets, with all of these factors considered, we expect thermal power hybrid retrofits to continue expanding through the forecast period. And last but not least, we have the hybridization of engines and gensets. In our discussions with the market, we found that most tier one manufacturers of gensets and engines are integrating batteries and advanced controls in combination with other renewable technologies. For this combination, the economic benefits are more obvious because of the fuel savings and because they do not depend on grid regulation. So because of that, we forecast engines and gensets hybridization to be the fastest growing combination, with the investments growing at a CAGR of 36.3% until 2025. So now let's move to the key countries. As we said, hybrid development is still at the nascent stage, but there are a few countries where we already see very attractive factors for hybrid. So here we picked 4 markets that are very interesting to watch for this technology or for this combination of technologies. And the first, of course, is the US. We understand that the US is the most developed market for hybrid, especially for the utility scale application. And this is because, of course, this emergence of solar plus storage projects that we are seeing in the US and a very healthy pipeline for that type of project. So that continues to be a key driver for hybrids in the US. We have over half of the plant energy storage capacity is co-located with power plants. And these represent 30% of the planned projects. One of the main reasons for that impressive growth in the US is because of this investment tax credit that they have, which allows developers to recover 30% of the installation cost of the utility scale battery if they are charged with renewable energy. So that is why there is an incentive to couple both technologies. Also, in the US, there are some state level incentives for both, for renewable energy and for storage, and the regulations from independent system operators that foster hybrid power plants and the possibility to stack value. So a very favorable regulatory scenario is driving hybrid power plants, especially for large scale applications in the US. The second country to watch is India. Since 2018, India has one of the most advanced regulations in terms of hybrid systems, which is the National Wind Solar Hybrid Policy. This policy was driven by the specific needs that the electricity market in India has, and where hybrids make a lot of sense because India needs to increase the share of renewables. It needs to replace coal production, but it also needs grid stability. And at the same time, they are facing constraints in transmission lines and land availability. So that is why hybrids makes a lot of sense for the electricity market in India. India has a pipeline of over 3 gigawatts of hybrid power plants that were contracted under hybrid specific bids, and there are more bids being announced, and we consider that that will be a main driver propelling new hybrid capacity in India. Then we have Australia, that despite they do not have a specific regulatory framework, they have a strong business case for hybrids because of the great wind and solar resources and because of the technical requirements in the grid codes that favor the combination of renewables plus storage. Also, Australia is a hot spot for distributed hybrids. The combination of renewables with storage and with engines is becoming a popular option for off-grid mining sites in Australia that are looking to reduce the cost of diesel and also driven by environmental commitments. And the last highlighted country is actually the UK, a combination of cuts in solar subsidies, increasing price volatility because of the great penetration of renewables, and the low power prices at certain times of the day make developers to be more interested in pairing renewables with storage systems. Especially we see solar PV, but wind plus solar plus storage is a great opportunity of investment in the UK, and we will definitely see more projects coming along in the near future in the UK. The other area of opportunity that we see is power electronics for power conversion. We saw a boom in demand for solar inverters that started about a decade ago, and now we are seeing a boom in demand of battery storage inverters and DC to DC converters, which can also be applied for e-charging. So we, at Frost & Sullivan, we see that this is a very expanding market considerably, a very dynamic market with both new entrants and traditional players in the power quality business trying to grab a stake in this market. We see that there is an interesting opportunity then in terms of power electronics and the software that comes with it. And the last area for growth and differentiation is the provision of hybrid power solutions framed under optimization services as a key value proposition. So the idea is for companies to use hybrid setups as a means to provide power optimization as a service for generation portfolio as a key value proposition. So this is especially valid for engines and genset suppliers, and of course for renewable power plants development. So to finalize this presentation, I would like to highlight some of the key messages on the hybrids markets that we at Frost & Sullivan have for you. So the first one is that globally, the market for hybrid energy systems is at an early stage of development, but we do expect a considerable acceleration of hybrid power plants deployment that is being driven by the need to increase the share of renewable energy generation in a price competitive, reliable, and dispatchable way. The second point, as we saw, a successful strategy to be in this market requires a set of building blocks and to create alliances with other companies to cover the technologies and the capabilities needed to successfully serve this market. The third point is that in the coming years, we will see more and more power generation technology providers that will embrace hybrids as a way to add value to their portfolio so that they can make their conventional technologies more capable of coping with the modern challenges of the power market, such as renewable power curtailment, the end of renewable subsidies, net zero ambitions from corporations, and the need for increased resilience. We saw the case of Wärtsilä, but it's also happening with wind manufacturers such as Siemens Gamesa and for turbine manufacturers such as GE, that they are expanding their portfolio in order to cope or to make their solutions more attractive. The other takeaway is that solar is and will continue to be the technology of choice for different arrangements like solar plus storage. We will see wind plus solar, gensets plus solar. So this will translate in higher shares from total capacity and investment. And finally, in the longer term, we see increasing adoption of hybrids, not only for power generation, but also in combination with e-charging infrastructure and also under power to X schemes to produce chemical energy in the form of green hydrogen, synthetic gases, or solid or liquid synthetic fuels. But this is, of course, a longer term vision. Well, with this, we finalize the webinar. I hope you find our content interesting and also useful for your business. And if you have any questions, please do not hesitate to reach out to us with questions. Thank you very much for the attention and have a good day.
If you do have any questions, please pop them into the chat and we will be able to get around to them. So just put them into the chat function, type your message, and that will come straight through to us. We've had one question in during the webinar, Maria, and it's very much a present question. So it says, would the war in Ukraine accelerate the development of hybrid power plants? It's a very current question.
Yes, well, an interesting question, and especially because there are like different opinions. Some are like more optimistic around the impacts of the war for clean energy, and some others are do not agree with that opinion. Our understanding is that despite the reactions that we see in the short term, like going back to coal, or maybe also increased investment in LNG infrastructure as a way for the most affected companies to try to recover the reliability of their energy systems, despite of this very short-term interest in kind of going for fossil fuels solutions. We see that all the policies and in the longer term, the governments are realizing that the best way to achieve energy security is by, and also cost-effective energy systems, is by betting on clean energy. So overall, we are seeing that most of the governments, the reaction that they are having is that implement very strong and long-term impact policies that favor the development of clean energies, especially renewables, wind and solar. And with that, we expect the deployment of these technologies to accelerate. And with that, of course, we know renewable energy, they are great for the planet, but not for the stability of the system. So we will need batteries for that. And in that case, when coupled together with the battery, renewables become hybrid systems as we define them. So in that case, overall, we see that this war will help to accelerate deployment of hybrid energy systems, especially with clean electricity, with clean renewables. And also we are seeing a lot of a big push for for increasing battery manufacturing capacity. For instance, the IRA, the programs in the European Union as well. So they are trying to get a faster adoption of battery energy storage, which is a key technology for hybridization. So in that sense, we also see that as this is accelerated in terms of manufacturing capacity, costs will reduce even further and, well, favoring the overall ecosystem for hybrid power plants.
And that relates to just one of your key takeaways, which was the solar plus storage, which is
Exactly.
going hand in hand, a twin approach.
Exactly. Well, we have actually a setback for solar plus storage in the US, especially because the former ITC or investment tax credit used to favor the solar plus storage setups because you would only get that incentives if your batteries were charged with renewable energy. But now the IRA, the Inflation Reduction Act, that was implemented or voted in August. So they introduce a new tax credit, but for standalone storage. So now developers are like more, let's say, free to choose whether it's better to deploy batteries through in combination with renewables, especially solar, or as a standalone asset. So in that sense, we see that standalone batteries will increase in terms of developments in megawatts and megawatt hours in the US, but of course, solar plus storage will continue to be an attractive market.
That's great, thank you, ma'am. Just having a look, we've no other questions in at the minute. So, oh, let me just, there's one just popped in there. It's a bit more of a comment than a question. So the first one says, is there any central resource to find suppliers of hybrid control systems or industrial battery storage units, such as a glossary website or a central point?
Okay, yeah, good question. So for control systems for hybrid power plants, we are seeing a number of competitors like approaching this segment. So yes, I would say that traditional power generation OEMs, like for instance GE or Siemens Gamesa, they are also offering this type of solution because it comes with the whole hybridization solution. So they have systems. Of course, we are seeing, as this person says, battery manufacturers that they of course see that there is a niche of opportunity for deploying batteries with renewables. So we're seeing a lot of integrators and also software providers offering these digital platforms and controls that help to optimize these to co-optimize actually the functioning of batteries and renewables. So yes, I think that would be if you search and with keywords in Google, you will see a lot of them. Some of them showcasing their solutions using webinars or white papers. But in case I think that you displayed my email, so in case you have any questions regarding which are the companies that we see in this market more active, also you can write to us in case you are interested in specifically in that group of competitors. But in general, they are like the same OEMs or battery manufacturers that are entering into this sector, sometimes acquiring companies or making partnerships.
Okay, I've just brought up your email address there, Maria.
Yes, there it is. So if you have any further questions related to this or other questions, please do not hesitate in contacting us.
And we have had another question in, Maria, so they're starting to come in. If you do have any, we do have time for a few more if you do want to submit, but we've just one at the minute. So it says, it seems Africa will struggle to build large natural gas infrastructure, more so a hydrogen one. So would you agree, Maria, that together with the solar generating conditions and the amount of space available, it would make this hybrid solution a real win for that region?
Interesting point. I mean, Africa is always like a struggle because it's a difficult market. You have to know it very well, especially with governments. You have the human resources also, some instability there. So it's a complex market to work. But what we're seeing is that the EPC companies or the integrators that are in entering into that market and trying to build capabilities in that market, we are seeing like a lot of success. Not everybody is willing to take that risk, but for the ones that we see, they are having very good results. And of course, I see that because of the lack in transmission systems, the combination of renewables with batteries, and also microgrids, if we consider other technologies and also demand, are a great solution for Africa. And I think that especially for these less developed regions, we are seeing that instead of this is also applicable to India. Instead of transitioning from fossil fuels or coal, to gas, and then to renewables, as Europe or maybe the US was their experience. We are seeing that these more developing regions, they are transitioning from oil or coal directly to renewables, so without passing through gas. So I think that yes, I agree with the comment of this person that hybrids will have a great opportunity in Africa, but of course we need the investment to do that. And now, hopefully, they are discussing, our governments are discussing bringing higher investment for clean energy in developing regions. So let's hope for that.
Yeah, so a good idea, but not without its challenges. But then all good ideas come with challenges. So
yes,
that's all the questions we've had, Maria. Thank you so much for your time, your presentation, and also for helping us out with the queries that we've had from our delegates. Thank you, everybody, for dialing in to watch us. We will have a copy of the recording of this webinar. We'll have it up online at investanI.com in the next week or so, and you'll get an email just to notify you when that is available. But on that, Maria, thank you once again, and thanks everybody for joining us.
Thanks you for having us here. Thanks everyone. Have a nice day. Bye bye.